Good evening, everyone. So our guest today is no stranger to Sri Lankan audiences. In fact, he was here in December under the auspices of John Keel's Holdings, although that does seem like a very long time ago now. He's been called the godfather of emerging markets and in fact is believed to have coined the term emerging markets. He served on the World Bank's Corporate Governance Forum. He's a member of the Economic Advisory Board of the International Finance Corporation and a prolific author. He managed over $40 billion under the Templeton Emerging Markets Group banner, and in 2018 launched Mobius Capital Partners. In his quest to find stocks in emerging markets like Indiana Jones, he's dodged bullets and he's been stranded in jungles. I don't think Dr. Mark Mobius needs any introduction to any of us. So I'll go straight into it. Mark, how has the coronavirus epidemic gone with you? I would imagine it's interrupted the entirety of 2020 for your busy schedule.
Well, that's for sure. It's been quite change for me. As you know, I tend to travel a lot. I usually don't spend more than a week or 2 weeks in one place. And what happened in February, I flew from Brazil to South Africa, to Cape Town, and stayed there for about 3 weeks, 4 weeks. And then the COVID-19 shutdown began. I flew to what I thought would be a better place, a warmer place, to Durban in South Africa. And I stayed there for over a month. And then I was able to have a plane take me here to Germany. I'm now in Munich, Germany. The German government hired a plane to take all Germans from South Africa to Frankfurt. And then I got another plane to Munich. So I'm very happy here because I can walk the streets, I can shop, I can do pretty much whatever I want to do. Of course, wearing a mask if I go inside an enclosed place. But it's a lot better than South Africa, which started a very, very strict lockdown.
Yeah. I mean, in Sri Lanka, as well as I think a lot of the markets you cover, you would have seen a sort of a whole range of policies from very strict lockdowns to partial lockdowns. And I think now we are sort of seeing a lot of countries coming out of it. We've seen a very sort of violent drop and a bounce back in developed markets, and we're seeing some of that echoed in emerging markets as well. How do you read what is happening to the actual real economies as opposed to the markets per se?
Well, first of all, you must remember that the stock market is a leading indicator. In other words, if you look at the stock market, you'll get a pretty good indication of what's going to happen in the economy maybe a year after. And we've had this incredible, rapid, precipitous decline, as you know. Markets came down anywhere between 30, 40, 50, 60%, depending where you are. But the recovery has been V-shaped. It's been an incredible recovery. Again, 30, 40, 50% in some cases, depending where you are in the world. And that gives you an indication and a sign that we will probably see a V-shaped economic recovery, which will come next year. Now, the reason why I'm confident of that is because we've seen these lockdowns having a very negative effect on many, many people. And I believe now many people around the world do not want to endure further lockdowns because it results in unemployment and very, very difficult hardships. So I think governments around the world will be forced to open up their economies.
If you look at what the sort of mitigation of the disease has been talked about, people have been talking about the hopes for a vaccine and the hopes for sort of, maybe even treatment protocols to improve and then sort of the mortality rates to come down. With regards to like a very specific sector, and I'm asking this because it kind of, what like a lot of people in Sri Lanka are wondering about as well. What are your views on the recovery prospects for global tourism post-coronavirus? If there is no vaccine and it becomes like yet another one of those diseases like malaria, for instance, how do you think how long do you think it'll take for global tourism to recover? Or will
I
it
think
not recover?
global tourism will recover rather quickly by the end of the year. This year, I believe you'll see global tourism picking up quite remarkably. And I think in Sri Lanka, you'll see more people coming in, and the recovery will be well underway. And the reason why I say that is because, as I mentioned, people are really fed up with the lockdowns. They want to get out, they want to travel. Yes, it's true, the internet has now provided a way for people to communicate and to have meetings online. But people really want to get offline and get into the places they want to visit. So I believe you're going to see a big recovery in tourism, in the airline industry, in the ship tour industry, and so forth. People want to travel. And, a vaccine is not the solution because at the end of the day, you cannot vaccinate everybody. That's number one. And number two, as we learned with the flu vaccines will last for only 1 year. Then you have to have another vaccination for a different flu strain. See, a lot of people don't realize that these viruses are multiple in character and they keep on changing. So the idea that there's a magic bullet to solve the COVID-19, it just doesn't, it's not realistic because COVID-19 itself is changing and adjusting. So
Of course.
I believe that at the end of the day, people will realize this and will be back traveling again.
I mean, when you've looked at sort of countries which have sort of strong sort of orientations towards tourism, like Thailand, for instance, and so on, are those sort of spots that you would pick to sort of look at value opportunities? Sort of, I mean, is there you way in terms of buying stocks, those kind of, like what kind of opportunities do you see in terms of coronavirus, in terms of picking stocks?
That's an interesting question because the reaction to the COVID-19 situation differs from place to place and from country to country and sector to sector. But generally speaking, what we've been focusing on for our investments has been, of course, healthcare, number one. That's an obvious thing, whether it be hospitals, testing agencies, pharmaceuticals, whatever. We look at that very closely. And then the second area we are looking at very closely is technology in general. Because as you know, with the internet traffic increasing, with billions of smartphones being sold each year, there's going to be an increasing demand for hardware and software. So we look at companies that are doing any kind of fabrication of products for smartphones and also the software. That's another area. Then the third area for us is in consumer-oriented industries who have adopted the software and the technology of the internet. So in other words, you have many offline companies that have now adopted online selling. So they have both. That is going to be, I think, the future. And of course, their offline will continue to be strong, but the online will also boost their profits.
If you look at another sort of impact, kind of a secondary impact that happened along with coronavirus was that sharp drop in oil and sort of that amazing situation where the futures contract traded negatively, I think, on the day of expiration. What is your impression of the longer term impact or the longer term picture for oil? I mean, a lot of the emerging markets that you follow are also commodity producers, right? So how do you see it to be a lasting impact? Do you think it's just another part of the cyclicality of oil? Or do you think this is kind of a sign that oil's days are coming to an end?
Well, the good news about oil for countries like Sri Lanka, India, China, a number of other countries who are net importers of oil, the lower price has been quite beneficial. Of course, as you said, there are a number of countries like Nigeria, Angola, a few others are oil exporters. and they, of course, have been disadvantaged by the low price of oil. But you must remember the biggest use of oil is in the transportation industry, automobiles, trucks, buses, etc. Despite the advent of electric automobiles, still the great mass majority of uh, transportation depends on oil. And as the lockdown ends, of course, the demand for these products, oil products, will increase, and you'll see the oil price move up. Uh, when it was 20 earlier this year, I said, look, it's going to go to 40. I have no problem seeing that. And I think it'll probably go higher, probably 50 or 60 as we end the lockdowns.
And another effect, of course, for Sri Lanka, again, had been, I think, the flight to safety and the sharp increase in the dollar kind of led to another round of depreciation for the LKR. And consequently, I mean, there's been a lot of stress about Sri Lanka and the prospects for paying down the sovereign debt bonds. And generally, again, it's not an uncommon problem, I think, for the entire EM frontier space, right? So, and Sri Lanka has, I think, seen now many decades of consecutive depreciations where the currency gets devalued, but it doesn't necessarily cheapen our exports over the longer term and doesn't necessarily help our competitiveness. Uh, what is your, I mean, as like a broad question, not just sort of specific to the
Yeah.
current situation we are in now, what is your impression of like how long the strength of the dollar will last for? And I mean, basically, isn't this just sort of a tax on all sort of EM frontier kind of markets as well?
Yeah, of course, the dollar is strong and has been strong, mainly because it's the key currency for foreign exchange, for trade, et cetera, et cetera. But that will be diminishing as we go forward. I think you're going to see the renminbi, the Chinese renminbi, becoming more and more important in trade. This is the objective of the Chinese government, of course. And the euro still is, still around and still used as a means of exchange. So I believe going forward, uh, the dollar strength will probably wane, uh, and you'll see other currencies coming into fore. The interesting thing is that if you look at some of these emerging market currencies, actually they have not declined that much against the US dollar. And in fact, in a few instances, there's been strengthening because, of course, there was a dramatic decline at the onset of the COVID crisis, and then there's been a recovery. So you've seen some of these currencies recover. The Sri Lankan rupee actually has been remarkably uh, resilient and relatively stable. I think if you look at uh, last year, maybe what, a 7% decline, then you see some recovery. So, you talk about single digit changes in the currency, which is not, a very big problem. Um, of course, if you see a significant weakening of the Sri Lankan rupee, then of course that'll be good for tourism. It'll be good for common exports, et cetera, et cetera. But probably you don't want to have big swings in the currency. That's probably not a healthy thing. So I'm quite pleased with the way the Sri Lankan rupee has been relatively stable.
I mean, I guess that kind of nicely leads into my next question. And you've been talking about how you're writing a book on inflation as well, I believe, in some of your more recent media appearances. Uh, you would have, I mean, if you're following sort of the changes we've had in monetary policy with what the US Fed has been doing and all the other major central banks following suit in sort of going in this race to zero for interest rates, and you look at this new widely touted MMT theories where people talk about, I suppose, almost kind of neo-Keynesian kind of theories where people are saying, monetarism is not as significant an effect on sort of central bank philosophies as they used to be in the 80s or the 90s and so on. What is your opinion with these new monetary policy frameworks and their imports to EM markets?
Well, too much emphasis is put on the central banks ability to solve problems. Central bankers are not in a position to recover an economy or generally solve all these economic problems. But unfortunately, people depend on these central banks to do something. So central banks keep on printing money, keep on buying. In fact, in the US now, amazingly, central bank is actually buying bonds, buying commercial bonds. It's
Corporate
quite
debt, yeah.
remarkable. And this is feeding a lot of liquidity into the economies. So the result of that is not inflation, but devaluation of currencies. Because nowadays, nobody knows what is the real money supply. Because don't forget, you have all these other currencies coming into the fore. The Bitcoin and other kinds of currencies of that nature. So I believe that you're going to see a devaluation of these currencies. Yes, it will look like prices are rising, but in fact, technology is keeping up with these changes, and products are getting better and better. Services are getting better and better. So in fact, we are in a deflationary environment rather than an inflationary environment. But I believe that it's unfortunate that the central bankers are put into that position because they really can't do much to help the economy. What can help the economy at the end of the day is putting people back to work, reducing the unemployment. And that's the reason why I believe the lockdown has to end. Otherwise, these economies will not recover. You can put a lot of money into the banks, but the banks will ask the question, where do I lend? Why should I be lending to a company that's going bankrupt or a company that is going under? So the solution is not more money. The solution is more jobs.
In terms of, I mean, if you look at countries, again, this is sort of a broader question, countries that are sort of middle income or sort of lower middle income countries like Sri Lanka with 20, 30 million populations, and sort of makes our cost structures higher than countries like, say, Bangladesh, for instance, but also unable to sort of move into more sophisticated export-driven development. And I think, I mean, if you look at the current sort of trend around the world, it looks like the coronavirus epidemic is also sort of retarding globalization. And so that entire mercantilist kind of export-driven growth track seems to be a door that's almost shutting for countries like Sri Lanka. What do you see in terms of sort of a viable development path for countries like us, which don't really have the populations to sustain economies of scale in producing for a domestic market, but also don't seem to be able to move up to sort of the more sophisticated export-driven development?
Well, I think in the case of Sri Lanka, first of all, you've got to look at the domestic market. You've got, what, 20 odd million people who need services, need garments, need food, et cetera, et cetera. So I think the emphasis should be, first of all, on meeting the domestic demands. In other words, increasing production to meet domestic requirements. The second area, of course, is export, the tea exports and the service export, software development and also tourism. You have to look at tourism as a sort of software export because you're servicing people coming into the country. That I don't think will diminish. A lot of people think that there's going to be an end of globalization. I don't think so, simply because the incredible impact of the internet means that people can now communicate around the world at an instant. And this generates trade, it generates tourism because people want to visit, want to meet, so forth. So I think the lockdown is temporary, it will end, and we will see a pickup in these services and so forth. Now, in the case of Sri Lanka, what I believe they have to do, they have to specialize. So in other words, you have tourism, but you want to emphasize a higher end tourism, not mass tourism. And this can be very, very profitable at the end of the day. That's number one. Number two, in terms of exports, of course, you have your tea exports, which will continue and probably expand. but you also have exports of high labor input products, garments, whatever. Again, specialization is very important. For example, uh, children's garments are very specialized kind of product, which Sri Lanka could easily capture. So that's what I would do. I would say, look, let's pinpoint those areas where we can really add value and then specialize in those.
ESG has also been, I think, a topic that's quite close to you, sort of environmental, social, and governance-related issues, and uh, I mean, connecting that with emerging markets as a whole. Do you find selecting companies based on ESG criteria more challenging when you look at the EM space, or do you feel that there's some sort of value added to it and it makes sense in terms of a criteria for selecting stocks as well?
Well, you know, the ESG, environmental, social, governance factors are now becoming very, very important to investors around the world. Uh, we are constantly learning that there are more and more institutional investors and private investors who want to invest in companies that have good ESG scores. And our prime premise of the funds that we manage is to help companies improve their ESG, particularly the G, the governance. So what we do is we work with companies and show them that their stock price can go up as a result of changes they make in the governance, independent board members, and all the other factors that go into good governance. So, and now with COVID-19, this whole area has become much more prevalent. Uh, Now you're seeing a much more emphasis on environmental pollution problems. In China, for example, they're addressing this very, very aggressively because we are faced with a respiratory disease. Obviously, pollution is very, very critical when you have respiratory problems. So I believe that the emphasis on ESG is going to grow, and now has become very, very important to many investors.
I mean, just as again, a bigger picture kind of question, one of the things that we've seen changing a lot, especially with the Trump presidency, has been the relationship between the US and China. And you've seen China becoming ever more dominant in Asia. I mean, you've recently seen China and India having tensions amongst their border after, I think, a break of many decades. Uh, what do you feel in particular about the US and sort of the China situation? What do you see the future of that relationship being, especially with the current tensions? Do you think that there will be a genuine change in the atmosphere if there is a new presidency? Or do you think that, I mean, this is something that is going to keep uh, becoming a source of tension in sort of the years and decades ahead?
I think it will continue to be a source of contention between the two countries. Uh, but at the same time, there are changes taking place because basically what Trump has been asking for is reciprocity. In other words, he's saying, look, if we allow your goods to come into our country, you got to allow our goods to go into your country. In fact, he's openly stated, look, I'm for free trade. If you want to open up completely free trade, I'll go for it. But now it's unfair relationship. And I think one of the impacts of Trump's policies have been for countries around the world to begin to wake up and realize that maybe they're not having a very good, fair relationship with China or whatever other country they're dealing with. So more and more, there's going to be unilateral agreements rather than multilateral, because as you know, the World Trade uh, Organization and other multilateral organizations uh, have sort of blanket policies that apply to everybody. But then this results very often in unfair relationships. So I believe that world trade is not going to diminish. It'll continue to grow, but there will be more and more unilateral agreements to make it a fairer place. I believe this negotiation between the U.S. and China will continue. It'll be contentious, but at the end of the day, they both realize that they've got to come to some agreement for the benefit of both countries.
When you look at the demographic structure of Chinese society, one of the things that commentators have said is that you're looking at a country that has a huge a cohort of one age bracket, and that soon you'll see one of the fastest aging societies that perhaps you've ever seen. How do you see that being a secular trend that people aren't noticing and not taking into account just yet?
That's a very good point. And I think the Chinese government is now realizing that they've got a problem on their hands. By the way, Vietnam has the same problem. A few other countries instituted policies of one child in the past, and now they're realizing they're getting a population period that's sort of with a bump in the middle, sort of an indentation in the age breakdown. So this is the issue, but from a economic growth point of view, of course, growth in China will diminish, will decline. But we're now in a stage where the age bracket between, let's say, 20 to 50 is much wealthier than they were before because they didn't have multiple children. And this is very, very important for countries like Sri Lanka because these people travel. They want more tea, they want more goods, and they have the money to have it. So it can be quite beneficial for countries like Sri Lanka.
So, I mean, you are confident that China can also transition into that internal consumer kind of domestic demand driven economy that the US is now, for instance?
There's no question that's the only direction they have to move now. And the Chinese realize it. You must remember that China wants to emulate the US. They want to be as good as, if not better than the US. And they look to the US and find out, okay, what has the US done to make it so successful? And one of the things, of course, is privatizations of state-owned enterprises, which Chinese have been doing. Another thing is technology. They realize that unless they get the technology right, they're not going to grow. Another thing is to build a domestic economy, because at the end of the day, the US is dependent upon the domestic economy, domestic growth. And China is doing the same thing. So interestingly enough, the US is telling Chinese, look, you've got to import more of our goods, you've got to open trade, so forth. The Chinese realize they also have to do that in order to feed the domestic economy. So yes, China is becoming, the growth in China in the future will become less export-oriented and more domestic growth-oriented.
How badly do you think climate change can affect economic outcomes over the longer term when you're looking at the global warming and
Yeah,
stuff?
I think at the end of the day, as scientists study climate change more and more, they will begin to realize that there's certain trends which are not reversible. In other words, a certain long-term climate trends which either repeat themselves or move in a unilateral direction. So the policy responses will probably change as a result of these new studies.
Right. If you look at your career and sort of your familiarity with developing countries, which country would you pick as having surprised you with their policy and the handling of the economy? I'm not talking about the obvious stories like Singapore or China or South Korea, for instance. I mean, even in areas like Latin America or Africa and so on, who would you say has done best in terms of handling the economy from like the governmental side? And what do you think are the attributes that are needed to be able to deal with that kind of skill set for government officials?
I would have to go, of course, Thailand is a good example where they've done a very good job, but you'd have to look at Vietnam is probably one a really dramatic example of where a one-party state moved from extreme communism to an open economy. And the result has been quite dramatic, a dramatic growth in the economy. Interestingly enough, uh, Vietnam has not really been that much affected by the COVID. They have not had dramatic shutdowns, et cetera, and they continue to operate and work and grow. So I would say probably Vietnam is one good example of this change.
And if you look at, if you look at countries that you sort of pick in terms of uh, regions like Asia, Africa, and Latin America, and you get countries which are commodity producers and sort of not commodity producers and so on. Do you generally, when you pick your investments, do you look at the country first and then look at the company, or is it company first and then?
Of course, we look at the country policies. We look at um, things like foreign exchange control, which are very important if you're an outside investor. You're bringing money in, you want to be able to get it out again. So that's a very important factor. And liquidity in the stock market is very important to us. So we do look at these macro factors, but it's in conjunction with the look at the individual companies. So in other words, what we will do is we'll study the company and then we'll see how government policies are impacting that company. And then we make the judgment of whether to invest or not to invest, or how to enter that particular country. So it's really a combination of looking at both. But the most important thing, of course, is the impact of government policies on foreign investment and on the individual company.
Over the years, which country has handled privatization of state-owned enterprises the best, from what you've seen?
You'd have to look at, of course, the UK and the Thatchers. They went through an incredible privatization program. But if you look at other countries, emerging market countries, I would say that Romania is probably a very, very good example of where they've done an incredible job. Maybe inadvertently, but they've done an incredible job. They privatized the state-owned oil company, Petrom. In fact, I sit on the board of Petrom, and they sold them the biggest stake to an Austrian OMV, Austrian oil company. It's been an incredible success story. But what the Romanian government did also, in order to compensate people who had lost their property during the communist period, they took 20% of all the state-owned enterprises and put it into a fund, and they gave shares of the fund to those people to compensate for their losses. And that's been an incredible program. In fact, I was in charge of Fondul Proprietatea when I was with Franklin Templeton, who managed that fund on behalf of the Romanian government. And by the way, that was a very unusual and dramatic change, because I can't think of any country in the world that would give a foreign fund manager the power to regulate or to manage a sovereign fund like this. But the result was very successful, I believe, because what we did is we started going after these state-owned enterprises to improve their performance, because of course the profitability of the fund depended on their performance. So we went to, for example, Hydroelectrica, which is the big hydroelectric company, and we told them, look, you guys are losing money. How can it be? There's a hydroelectric, the water is free. And we found out there was corruption. Some corrupt officials were buying the power from Hydroelectrica at cheap prices and then selling it on to the distribution companies. Once we eliminated that, immediately the company became profitable. So it's an example of where a country really made a dramatic change and improved the whole environment.
I also wanted to sort of branch out into your sort of broader experience, and I guess that Romania story is a nice segue to that. In your career, you've been, you started in 1986, I think, when John Templeton hired you. and sort of you spearheaded the emerging markets business for Templeton Funds, and then you went through sort of the Franklin Resources acquisition of Templeton. Uh, and I think you also, in addition to your PhD in economics, you also had a background in market research. Uh, what do you find? I mean, do you find in your sort of process in looking for companies over the years, you would have seen access to information becoming ever more, ever easier? And I mean, you've sort of established a career where you've gone and sort of gone into each country and kicked the tires and done sort of the hard work of research. Whereas now, I guess it's a case of firing up the internet and you can get like a company's filings in seconds. How have you found like that? I mean, the nature of sort of your idea generation changing over the years like that?
It's a very important question because with this explosion of information around the world, with the internet and the ability for us to access information, Google, one of the most successful companies in the world, has opened up a whole world of information for all of us. So now the problem is not enough information, but too much information, and many of it misleading information. There's a lot of fake news. So our job is to filter through all of this and try to make sense of it. So this has been a big change. When we started in emerging markets in 1987, the information was not available. There was no internet. We had to go and visit companies, interview them, which is why I traveled so widely in early years, and why we opened up offices all over the world. That's changed. We now can get more information on the internet and other sources. But what has not changed is the need to really dig below the surface and take the hints that you may get from internet or other sources and dig deeper to find out what's really happening behind the scenes. So a very good example is actually very relevant to where I am right now, Munich, where a company called Wirecard was
Yes,
headquartered.
famous that.
And you've been reading about $1 billion missing. Now, how can this happen? You have famous auditors, you have a big company, they have annual reports, et cetera, et cetera, et cetera. How can money, billions of dollars, be missing? But if you dig a little deeper, you find that as early as a year ago, there were rumors in the press. In fact, at a few points in time, police had raided some of the directors' homes. So there were questions being asked, and a number of companies were shorting the stock, the Wirecard stock. So there's an example where the information is there. If you're willing to pick it up and dig deeper, you may be able to uncover something which could surprise you. Now, unfortunately, the regulators, apparently they made some attempts, but they really didn't dig deep enough to uncover this incredible fraud. So the challenge now is, as I mentioned, taking these hints that you see and taking the initiative to dig deeper and deeper so that you can avoid the making mistakes when you make your investments. It's not easy, but it's possible.
And in your career, when you've looked at the coverage you've done, I mean, across regions, across economies in various states of development, across sectors and so on, have you been more comfortable with certain sectors and like sort of less with others? And how have you sort of organized sort of that scope of coverage and that breadth of coverage that you've had? You employed, I think, at the height, was it something like 50 or 100 analysts to cover the entire space, right?
Yes,
So
yes.
how did that process work in your organization? How did you design it?
That's a very good question because the industry has changed a lot, the fund management industry. When we were running the Emerging Markets Fund at the beginning, there was no index They started the index, or they were beginning the index about that time, but there were not nearly enough countries. There were only, I think, 6 or 7 countries in which we could invest. Now there are 70 countries we can invest. So the scope has widened dramatically. And then with the introduction of the exchange traded funds, the ETFs, there's been more and more emphasis on index trading. So when we were running these big emerging markets funds, we were almost forced to look at the index and make sure we were not too far away from what was happening with the index. Because people would ask you, have you underperformed the index or outperformed the index and so forth. So naturally, you tend to look at the index. Now, there's a realization that with the advent of the ETFs, which are basically index funds, active managers no longer should be following the index. They should be doing something more independently. And that's the big change that's taken place. So now, instead of looking at index stocks, we look at small and medium-sized stocks that may not be in the index, or maybe have a very small weighting in the index, because we want to be able to outperform the index, do something different from the index. And this is what clients are demanding of us, because our charges are higher normally than the index funds. Index funds are just mechanical. You don't need many people. So that's the big change that's taking place. And therefore, we as managers have had to change our behavior. And that's the reason why the in-depth digging is so important, so much more important to us going forward.
So by and large, you are on the side of, you think active management is a segment of fund management that will eventually rebound and survive in the face of things like index funds and ETFs and so on?
Yes, exactly. That's exactly what's happening. And you're seeing more and more funds being started, which emphasize active management. In our case, for example, we actively engage with the companies in which we're invested. So we become true owners in a sense. We say, look, we bought the stock. Now we're really an owner in the company, and we should take interest in what the company is doing on a day-to-day basis.
So for Mobius Capital Partners specifically, you're looking at sort of a much smaller set of stocks with much higher weightings in your portfolio.
That's right. So the number, when we were running the big emerging market funds, 70, 80, 90 stocks was not unusual to have in the portfolio. Now we have 25, and we really don't want to go more than 30. So that means we can pay more attention to each individual company and work with them to help improve corporate governance.
So it's a case of, I mean, do you look at it in terms of we don't have anything in technology, we need to find the best performer there? Or is it just purely driven on your estimate of the company?
Well, what we found that, of course, as you know, what drives stock prices are earnings growth. Or expectations of earnings growth. And that's the big change that's taken place, because a lot of companies have gone to the market without having any profits, zero profits, but the expectation of earnings growth is there for the future. So what we've got to do is try to locate companies that we can see going forward. Of course, if they have a history of good earnings growth, that's fine. But a company that is going to be growing at double digits going forward on an earnings basis in dollar terms, by the way, because we're US dollar investors. So that's earnings growth is the key. And of course, to get earnings growth, you've got to have a high return on capital employed, which is a very important indicator. And you've got to have companies that are capable of paying dividends. Because if a company is not paying dividends, that tells you that probably can't afford to pay dividends. They can't grow, make investments, and also pay dividends at the same time.
So what are the key sources of idea generation for you, for Mobius Capital Partners now?
What we do is we scan all the stocks, thousands of stocks around the world. Certain sectors we tend to stay away from. Banks, by the way, are very difficult because nobody really knows, and nobody will tell you what is the bad loan situation with banks. So you've got to be very careful with banks. Then you've got to be careful with uh, mining companies, natural resource companies, because of environmental problems. Um, and as I mentioned before, you've got to get into companies that have an internet strategy or some kind of technology strategy for their business. Otherwise, it's wide open, and we will go into any sector.
So in general, how have you organized your current set of analysts, and what do you look for when you're hiring talent, and how would you develop specializations in sectors for the people that you have in your organization? Is it a case of, do you change their special, do you rotate analysts around sectors, or how does it work?
Well, of course, we like to have people that get expert in one area, in one sector, but we also need people who are flexible, who can move from one thing to another. But most important, we look for people who can assess the people with whom we're dealing. In other words, analysts who not only look at the balance sheet and profit and loss statement, but look at the management of the company. What is their reputation? What is their psychology? What is the sociology of the organization? Because at the end of the day, um, companies are run by people. And if you don't understand the people, then you don't understand the company. And that could be very dangerous. Very important for you to understand the people behind the company. So we put a lot of emphasis on that aspect.
How did you balance over your career? How did you balance between pure investing and all the other stuff you needed to do if you're senior in a money management firm like marketing and admin and stuff like that? Which parts of that non-investing stuff were you happy to do, and which ones did you not want to do?
Well, the beauty of being with a big organization like Franklin Templeton is that a lot of the administrative things are taken care of by you. They you just can forget about it and just focus. Whereas now with our own company, we have to worry about all these things. So it in some ways it's very nice to understand all the background, the sort of the mechanics, the compliance, the trading, all the rest of it. On the other hand, it makes you much busier. You become much more involved, but it doesn't detract. In fact, in some ways, it helps you understand more about what's happening in the economy as well.
What have been the challenges for you to be more activist with Mobius Capital Partners and dealing with the politics of EM companies?
Well, one of the things that we found is that you can take a horse to the water, but he may not drink. So you've got to deal with companies who are willing to work with you to change. So when we are talking to companies, when we first, the first step, of course, is to look at the financials and have some confidence that the company is going to be growing. But then the second step is go and visit them and ask them about their corporate governance and whether they're willing to improve certain areas. Uh, that usually disqualifies half of the companies because half of them are either not willing or unable to change. You find out a lot about in family-owned companies. Very often they cannot change. So in that case, we don't go forward. We just eliminate that company. But those that remain, normally they're very cooperative, very helpful, and they appreciate what we're doing with them. We appreciate the recommendations we're making. And that means that stock price will probably improve going forward.
You've also been an investor in real estate in a private capacity, right? So what kind of philosophy do you follow for those investments?
I like to invest in real estate in places where I would want to live. So that's the criteria I use. If
That's
I like to live in that place, then I would buy a piece of property. That's really the number one criteria. Of course, you can look at pricing uh, from many, many different angles, but at the end of the day, price is secondary. It's more about location and uh, the pleasant surroundings and a place where you would personally be willing to live.
what has been your sell discipline? Like what kind of, when you look at taking a position out of your portfolio, do you look at sort of fundamentals to deteriorate, or is it a case of if a stock, do you have a rule where if a stock drops by 25% or more, then you remove it from your portfolio? How would you look at it?
No, it all depends on the fundamentals. I mean, if a stock declines by 20% and the earnings are still intact, and maybe we find that the earnings are going to be improving, we might even buy more. So a lot depends on our assessment of the earnings of the company, not on the stock price. In terms of selling, the sell discipline, what we will do is we'll say, okay, we've got a target price. If it reaches that price, we will sell some, but we'll keep on holding to see if it's going to move further. So we'll say, look, we have, let's say, 5% of the company. If the weighting as a result of the increased price goes up to 7%, we may sell 2% and keep the 5. So in other words, we keep on moving and staying with the price. If the price declines, then we've got to figure out why. If the reason is related to a expected decline in earnings going forward, then we would sell.
What is your overall view about Sri Lanka?
As you know, I'm very positive in Sri Lanka. As you know, I bought an apartment there, and I'm very, very interested in investing in Sri Lanka. So I have a very positive feeling towards Sri Lanka. I'm particularly interested in move towards more privatization. Uh, I think Sri Lanka has got to move more aggressively into the privatization arena, privatization of state-owned enterprises, which I think will give an incredible boost to the economy.
If you look at the rise of quants and factor-based investing and the relative decline in value, at least in terms of sort of the screening process that you were talking about earlier, do you see a big influence in EM investing from the quants, or and I mean, do you see that as something that will be an increasing trend, or is it just harder because EM markets are less sophisticated and less liquid and have less disclosure, I guess?
No, there's a lot of quant investing in emerging markets. The markets are big now, they've grown. You've got big countries like China, India, Russia, and other countries, Brazil, etc. And it's amenable to quant investing, and it's being done. And of course, with the use of artificial intelligence, more and more managers are trying to use those techniques to improve their performance. But whenever you're dealing with human behavior, it's very, very difficult to solve problems, even with the so-called artificial intelligence, because the parameters are constantly changing. Human behavior is such that they can constantly adjust to changes in the environment. If you look at the whole area of fraud and fraud detection, you'll find that it's impossible to detect fraud with a machine. A machine could tell you what things you should be looking at, but at the end of the day, a human has got to make the last judgment.
If you look at, I mean, when you look at your orientation and your philosophy as an investor, um, have you been more like, have you ever bought a stock at say 40, 50 times earnings, or are you more likely to sort of be, have you ever bought a stock that's in a distress situation? I mean, what is your orientation in terms of approach to sort of buying companies?
Yeah, that's a very good question because a lot of people use the parameters like PE, price earnings ratio, or price to book, etc. And many of these parameters are now not as useful in the new era that we face with the internet and with interest rates the way they are. Because you must remember that the PE ratio is really a reciprocal of interest rate. So let's say interest rates are 5%. The reciprocal is 20. That means that you can buy a stock at 20 times earnings and still be having a bargain. If interest rates are 1%, you can buy a stock at 100 times earnings. So this has really had a big impact on the way people look at companies and how they value companies. So we pay less and less attention. In the past, of course, when interest rates were 10, 15, 20%, we paid a lot of attention to PE ratios. But now it's more about earnings growth and about the ability to outpace the economy.
We've got a couple of questions from our audience as well. What's your view on fund flows to EM and FM for the second half of the year?
Fund flows in EM are increasing, going up, simply because there's more money around. Of course, the more money is going into the US market, but in emerging markets, the same thing is happening because there's simply much more money supply. Another interesting factor is that you must remember with the lockdown and with the closing of casinos around the world, there's a lot more internet betting and a lot more internet trading on stock exchange. It's become very cheap to go to a broker, online broker, to buy and sell stocks. So this is also driving more interest in these markets.
And what do you think is the coronavirus impact on construction and real estate sectors for EM? I was in, would you be again a value? Would you see like a value discount bargain sort of situation in these sectors, or would you still wait to see what the recovery from the coronavirus situation will be?
No, I think there's still bargains to be had, particularly in the residential side. In the office sector side, I believe the demand for office space will probably decline going forward as a result of the switch more and more to online kind of conferencing like we're doing now. Office space will not go away, but I'm just saying that residential space will probably play a bigger role going forward.
Over your career, who are the best CEOs in emerging market companies that you've invested in with?
The CEOs that have a single-minded orientation towards the company. In other words, CEOs that really are committed to growth of the company and committed to the people in the company. The CEO that create a team feeling within the company. These are the ones that are the best.
Are there any specific guys that you can remember that stand out in sort of the stocks you've picked?
I don't want to mention any names. I may get into trouble.
So, I mean, with Mobius Capital Partners at the moment, could you just sort of explain the fund structure? It's more a mutual fund structure or a hedge fund structure?
Actually, we have two funds. We have a Luxembourg open-ended fund. That is a fund where anybody can go in and go out any time. It's called a CCAV. It's Luxembourg that people can buy. And then we have a closed-end investment trust in the UK listed on the London Stock Exchange. And of course, that is traded on a daily basis, but we don't redeem. The manager doesn't redeem shares. It's just traded in the market and selling at a discount now. Uh, these things range from a premium to a discount, and now there's a discount on that stock.
Are there minimum levels for investment for either of the two vehicles, or?
No, there's no minimum. People can put in as much as they want, as little as they want. You can go in and out any time.
What is your opinion about the differences in sort of investment management compensation structures, like the difference between the 2 and 20 hedge fund model and sort of the 1% of AUM that mutual funds generally tend to have? Do you think, do you favor one structure over the other in terms of actual results to investors?
It really varies tremendously. The 2 and 20 in private equity is really necessary because the private equity manager is really going after a big hit. Out of 10 investments or 20 investments, maybe only one will be really a big payer. So he's got to spend a lot of effort and time to help these companies improve. So the private equity investor almost becomes like a management consultant. So if he's getting a 2% fee, he's probably earning it, because he got to spend a lot of money and time. And then if he's successful, if he gets 20% of the profit, it's okay, because as you know, for the whole fund, only one stock would be really a big success. Now, in terms of other managers, in our case, we charge anywhere between 80 basis points to 1%. And it depends on the class of shares. One class of share will have a performance fee. So people can pick and choose whichever they want. But our work is very, very difficult. We've got to spend a lot of money to visit companies, to talk to them, and so forth and so on. So it's very, very different from an index fund. But even some of the index funds and ETFs are charging as much as 50, 60, 70 basis points. Of course, some of them are very, very cheap, much less than 1 basis point.
So by and large, I mean, these current proposals that you're hearing in the US, for instance, about taxing carried interest and so on, you're not in favor of stuff like that?
No, of course not. I think you've got to provide an incentive for people to work hard to make money. And if you put taxes on these things, the industry will die. And you must remember, these private equity have created an incredible number of very successful companies.
You were talking about fraud like many times with Wirecard and so on. And I think one of your favorite stories has been one of the first stocks you ever bought in Hong Kong, which ended up turning out to be a fraud. Over the years and like with all the experience you've had, has it been easier for you to detect fraud in publicly quoted companies, or is it just sometimes you can never tell?
It's very, very difficult because you trust the auditors. You interview the management, they sound like they're doing a good job. You don't have access to the bank accounts, so of course, you can ask questions. One of the best protections, of course, is a truly independent board of directors who can ask the difficult questions. And this is the reason why I emphasize people, because if you look at the people, then you can maybe detect problems going forward. So in the case of a Wirecard, the managing director started wearing a black turtleneck sweater like Steve Jobs and like the woman who ran
Fair
the,
enough.
yeah. So that could have been a sign. You got to be careful.
Certainly, I guess you're saying judgment of character in a CEO is sort of a very crucial part of.
Very crucial, very important. Because if the top manager is not very ethical for one reason or another, and I don't know what the Wirecard situation was, but obviously he he must have known something, and if he didn't, he shouldn't have been in that position. Um, so I think at the end of the day, when this all comes out, you'll see that a lot of people end up in jail.
Yeah, yeah, the Wirecard
it's
situation is crazy. And
it's
I
very
mean,
it's
German
very
regulators,
embarrassing for the German government. Can you imagine the Germans being cheated like this? Amazing
it's unheard of, right?
and
It's
heard of. Although it has happened before. This is one of the mistakes people think when they say, "Well, emerging markets are very dangerous, and developed markets are okay." No, there's fraud everywhere. It can happen anywhere.
if you look at, I mean, so you've run a 40 billion fund and with, you said 60, 70 positions and so on, and now you're running a far more concentrated vehicle. What has been, which stock has, if you look over your career, what do you remember as being a stock that had the largest weighting in a portfolio? Have you ever had positions that were 20, 30% of your book? Or
Oh no, no, because uh, there are rules and regulations. For example, with the CCAV uh, fund, there's a so-called 540 rule, which says that you cannot have more than 40% of your portfolio in stocks that have a 5% or more weighting. So that forces you to be diversified. So most mutual funds do not allow you to be so concentrated. Now, if you're in private equity, that's a different story. But public funds, no, you have to be diversified.
and if you look over the years, I mean, looking at like what coronavirus has been and so on, you went through the 1987 crash, you've been through the 1998 Asian contagion. You bought, I think, stocks in Russia when Russia fell apart in 99, I believe. What do you think the current coronavirus crisis most resembles for you?
Probably the Asian currency crisis is probably a good example of that. Um, it's similar in terms of suddenness and impact. Uh, the difference this time around is that it spread globally. It's a global phenomenon. Whereas with the Asian financial crisis, it started in Asia and then gradually spread to other parts of the world. But the impact this time has been incredible. It's been a very dramatic impact on a global basis. See, I'm getting a message that I have another call.